Welcome to the One Step Wealthier podcast, where I help you to get a little bit better every day and to achieve your financial goals. Follow along with me, and every week we will talk about all things personal development and personal finance. Together, we can get one step wealthier. So it is 6:30 in the morning where I'm recording this from, and I'm recording this from London. So I was going to start recording my episode way before that because I have to leave to work in an hour. But then I had some issues with my microphone. It was not calibrating correctly with my laptop, but I fixed it. So it's all good. Now I can record this. And today I wanted to edit this episode as well, but probably it's not going to happen. Probably this is going to be something for the following day, but that's okay. I just hope the sound is okay. Right. So today I wanted to talk to you about my first steps when I started investing, how I started investing, why, and what mistakes I made when I started. I grew up in a very working class family, and no one, absolutely no one around me was investing. I used to think about investing like being something that rich people in suits did, rich men in particular. And I used to think that you needed so much knowledge and so much money, and investing was something that people did when they had too much money on their hands and they just didn't know what to do with it, and they would invest it. My beginnings were very humble and maybe not where they should have been. I first started back in 2017. I got made redundant and I had a chunk of money to play with, let's say. And I didn't know how to make it grow. I used to think I wish somebody would actually tell me the simple steps what I can follow, or I wish I would just give that chunk of money to somebody and somebody would invest that for me with the guarantee that I could get it back, of course. And back in 2017, I started looking into two things. The first thing that I started looking into were the peer-to-peer lending platforms. So I remember in Europe, peer-to-peer lending was gaining popularity and they felt quite safe. So just to explain, peer-to-peer lending platform is where you lend money to someone for certain project or to buy a car, or just like a payday loan sort of thing. These peer-to-peer lending platforms and loans, they seemed quite easy to understand, right? I mean, I have the money and I would lend the money to someone else, and that someone else would give the money back and I would get quite an attractive return. So everything seemed great and I thought it was a great idea, and I felt like Warren Buffett, or I felt like a big investor when I was doing that, because I remember that you could actually pick which person could you lend to, what do they need it for, whether it was a male or a female. So I remember that I felt like a big decision maker back then. And what went wrong? So peer-to-peer lending platforms are lending generally to projects and to people who cannot get the financing through any other means. That meaning you cannot go to the bank and say, okay, I want to buy a car, or I need this loan for this purpose. Why wouldn't the banks lend? Well, maybe because your credit score was not perfect. So maybe in the past you did not make such a good money decisions, and now other banks or other financing people wouldn't want to lend it to you, and therefore you would come to the peer-to-peer lending platforms. And because of that, I realized that a lot of my loans were defaulting. But that happened slowly. That didn't happen right away. I realized that there was a lot of money that I would never be able to recover again. And also, if I needed liquidity, if I needed to get the money, I could not get it right away because I had to wait for those loans to be repaid. So some loans were 24 months, some loans were 36 months. Although you could diversify quite well there. So you could lend to many different people, let's say 10 euros to one person, 10 euros to another person. It still didn't really work out. So at the moment, I still have 3 of those platforms open. I opened about 5 and I'm trying to get the money little by little from them. I'm getting the money little by little, but I know that a large percentage of that money is going to be irrecoverable. Hey, I just wanted to pause for a second and let you know that I made something for you. It's a free guide called Start Investing Without Freaking Out. I created it for women who want to invest but feel like it's not for people like us. It's a guide I wish I had 10 years ago when I had no idea where to begin. Just click the link in my Instagram bio at One Step Wealthier or in the description below to grab it. Now back to the episode. So at the moment, my money is locked in some of those peer-to-peer lending platforms. And this is like having money in a slow motion hostage situation. You don't know when you're going to get it. I have a couple of thousand there. I treat it as lost, really. I don't count on it anymore. And I think peer-to-peer lending, it actually taught me a lot of things and I wouldn't change it in any other way. Yes, I did lose that money. Let's call it lose or delayed. I definitely didn't make a profit from there, but it taught me that investing was for everyone, that investing could be for people who were not that savvy in finances yet, and that the money doesn't disappear from one day to another. Because I think people from my background, we always think, wow, so if you invest that money, if something crashes, it will disappear. And although that can be true with some investments, generally, in this case, with the peer-to-peer lending platform, not all my money disappeared, but the chunk of it was not repaid, really. So the platform couldn't actually repay it back either. And then they offered some payback guarantee, but I think that was with some terms and conditions attached. So yes, another lesson that I learned from there, high returns means high risk as well. So some of those peer-to-peer lending platforms offered 30% of return. When somebody offers you 30% of return, you have to know that you're taking a higher risk as well. So there's no free lunch anywhere. So this is my first early experiment, peer-to-peer lending platform. My second one, I tried to invest in precious metals. So that meaning gold, silver, and platinum. I opened this account. It was called Gold Money, I think, back in 2017 as well. And what I thought that I was a big investor already, and I thought that I could outsmart the metals market. So what I thought I could do is trade metals like stocks. So buy low and sell high. So I remember I first bought a lot of gold. So I think all my money went to gold. But then I realized that gold price was getting higher. So I decided to sell my gold and buy platinum and silver instead because they were cheaper. And then when they would go up, then I would sell them and I would buy back gold. So I thought I was smarter than everyone else. It didn't work. The timing was not glamorous, and I learned that it was also not such a liquid investment, and I didn't time it well as well. And I had to pay storage fees, and the growth was not as much as I expected. So at the moment, I have to say that I still own some gold, but I don't own it physically. So I don't have to pay any storage. I own it in form of ETFs of physical gold, because I think gold will preserve its value in times of very high volatility like we're having at the moment. And it is an excellent investment for portfolio diversification. And it is an asset that generally goes and stays up when there is uncertainty. So definitely, I will still keep gold. I would still have gold as takeaway from my past mistakes, however, in a different form. And finally, I decided to close my gold money account 2 years ago. And it was not as straightforward as I thought. You had to phone in, and in the end, you had to answer lots and lots and lots of security questions. If there was a return in my investment, I think I broke even. I broke even in those 6 years that I had those investments. So I didn't lose, but I didn't win anything either. So apart from peer-to-peer lending platforms and precious metals, I also started, quote unquote, investing in crypto. So I had exactly the same idea. That was back in 2018, I think. And I had exactly the same idea. Okay, so what I'm going to do, I will outsmart the market. I will buy low and sell high and then move to another crypto and then try to make money with that one. And it is true that with crypto, I was very cautious. So I invested, so to speak, monopoly money that I could afford to lose. And I think still nowadays, you have to invest in crypto only the money that you can afford to lose. So crypto is very, very new and we still don't know where it's going. It is always better to be cautious with crypto. So my idea didn't really work. I made some money from it and I kept buying more crypto with that money. But then when it went to all times high, at the time, I sold everything. I thought I made a good profit, but then I went higher. And obviously, you cannot time the price of anything. And also, I realized that crypto was highly volatile, was very hype driven, and it is not something for long term. So with crypto, I had to be aware of the prices at all times. So I couldn't just relax on the beach for 6 months and not look to my investments because the chances were that the hype coin that I bought, it would go down and then I wouldn't sell it on time. So that's how I saw crypto. Nowadays, I still own some Ethereum and some Bitcoin, but I own them in a cold wallet. So in an external wallet where the platform, if it closes, I will not lose my crypto on there. So the crypto I own, I don't get any percentage, any compensation for that. However, it is mine. So whatever happens, if there is a World War III, I will be able to access my crypto from anywhere I go. So these are the only ones that I hold at the moment, Bitcoin and Ethereum, and I intend to hold them for quite a long time. But I also make sure that crypto never surpasses more than 10% of my portfolio because I still think it's a highly volatile asset and you have to be careful with it. So then with the peer-to-peer lending, with metals investments, and with crypto, we're heading to the turning point. How I discovered the stock market. Back in 2020, I was back in Europe and I had a lot of time in my hands because it was the pandemic. I moved in with my parents, strangely, because just before that, I was doing a project in Nepal and that project closed and I had to go back home. And back in that time, my home I had no home because I was traveling for quite a while. I was very nomadic for a few years. I cycled Australia. Just before that, I sailed in the Pacific Ocean while working as a freelance. So I realized that I had to go back home with my parents, that it would be a good time maybe for a little while. So I had nothing to do really, because my old job was still paying me the salary and I was going for long runs, long walks, started waking up at 5 a.m. and started doing things and I didn't really know what else to do. So I started learning about finances a little bit. I started reading personal finance books, reading blogs, watching YouTube videos and listening to different podcasts about how to get rich on the little money. And also I had some chunk of money sitting in my bank account that I didn't know what to do with. So when I saw the stock market as an opportunity, I started exploring different platforms and I discovered ETFs as well, which are sort of like a mini funds that you would put money into and it would grow as a sector or as an industry or as a fund of a country. And I started experimenting little by little. So I didn't put the whole chunk of my money in there, but I started really small. I put 500 first to see if it would disappear. Well, it didn't disappear because during the second part of the year, the market was steadily growing. So it was quite motivating for me to watch my investments grow little by little. And I started putting more and more money in there while I was discovering different types of ETFs and what was aligned to my long-term goals. With the stock market, I experienced a mindset shift because up until then, I thought that investment was more about speculation than about strategy. And with the stock market, I realized that investing can be and should be long-term. That it shouldn't be about buying high and selling low and waiting for the right moment to get all in. It should be just something really, really consistent that would build up. I discovered compound interest as well on how my investments can grow and compound over years. And frankly, that was really, really motivating to watch that if I invested 500 euros every month, how would my investments evolve and how much money would I have in, let's say, 20 years? And for me, the money was always about freedom. So I didn't spend that much while I was traveling. So I realized that I didn't need that much money either to do the things that I like. I saw the big numbers, but they were not as big as I thought that they would be to purchase back my freedom. And with the stock market, yes, there is volatility and the markets sometimes go up and down. Sometimes they stay down longer than you think they would. Sometimes they just go up, up, up. And the volatility is just part of the ride. I also realized that you can't really time the market. That time in the market, it is actually better than timing the market. So the sooner you get in, the better. So what would I say to someone who is starting right now? I would say, don't wait to be an expert. Start small and stay curious. The mistakes that you will make, they are tuition. You can really sometimes benefit from those mistakes because those mistakes will prevent you from making larger mistakes when you maybe have a larger pile of cash to invest in. And it is okay not to have a plan first. Just make sure that you do everything step by step and you never stop learning. So this is it for today. And I hope that my reflections have motivated you to start investing. Remember, the best time to invest was yesterday and the second best is today. And also please note that this is not individual financial advice. Please speak to your financial advisor regarding your individual financial needs. You have just invested in your personal development by listening to this podcast. Thank you for being here and helping yourself to become one step wealthier. Don't forget to subscribe to access new content every week and to better yourself. Stay wealthy, and I hope that you have a wonderful day.